Should each of us be able to put our capital where we think it is best served for growth, protecting the environment, improving communities, or do what we hand the money to those unelected CEOs who are using our money? If recent trends are any indication, the decision has already been made. We're giving up returns in our individual stock investments and mutual funds so that investment managers and CEOs can pursue what they think is best. Does that seem right to you? Big money managers take their clients' money and use it to push their political agenda with possibly personal motives? Historically, the motive for managers has been to maximize your returns. But now ESG has given managers a sort of slush fund to pursue what they prioritize with your money. Because the definition is so ill-defined, this leaves open the door to massive potential malfeasance. Recent surveys have shown that climate change, for example, is nowhere near the top priority for voters. Washington Free Beacon reported this. They said a survey conducted by the nonprofit American Council for Capital Formation along with Morning Consult showed the top 5 priorities among likely 2020 voters are, in order of percentage, the economy, 19, healthcare, 16, national security, 8, gun policy, 8, and seniors issues, 8. After those issues, climate change was tied with immigration at 7%. It is not the top priority for voters. It's probably nowhere near the top priority for investors. And the subject is deeply divisive between Republicans and Democrats. According to a recent Pew Research survey, 67% of Democrats believe that climate change should be a top priority, but only 21% of Republicans. What this means is that $40 trillion has essentially been weaponized to favor Democrats either directly or indirectly. But the truth is, it's not their money. This is the worst type of elitism, and it will have profound consequences. One of the consequences already underway is that our markets have been skewed by all the managers moving money to ESG. JP Morgan's equity chief wrote recently that ESG may be a bubble in the making. His argument is that investors aren't paying enough attention to corporate fundamentals and that trades will get crowded and everyone piles into the same investments. He's got a point. We're seeing it bear out right now. As this is taped, we're watching Tesla go up day after day, 10, 20%, and also Beyond Meat. Now, these are 2 perfect ESG investments. Tesla, because it is an electric car manufacturer, and that seems very environmentally sound, and Beyond Meat because it's really taking us away from animal-based proteins to plant-based proteins. Both are classic ESG stories. Neither is the market leader in sales, but both are the market leader in investing dollars. Each one has a relatively small market share and limited profits compared to the traditional competitors, yet both have experienced a massive influx of investment dollars into their stocks and have huge market caps compared to their peers who all have higher sales and higher profits. Is this a bubble? JP Morgan seems to think so, and they offer strategies to avoid problems if the bubble bursts.